pension fund administrators, well, let's say pension fund contributors, 14.4 trillion naira face the risk of losing its value to currency depreciation and inflation. The situation has gotten worse recently with exchange rate free fall against the greenback. Nigerian PFAs allocated about 99% of their net asset value in a mixture naira-denominated assets made up of government securities, commercial bonds, and other security instruments, domestic shares, real estate, and other forms of money market instruments. August 2022 data from PENCOM shows the Nigerian pension fund's net asset value, that's NAV, was about 14.4 trillion naira, up from 13.2 trillion naira at the end of last year. A huge chunk of the NAV, which is about 9.2 trillion naira, is invested in government securities, up from 8.7 trillion naira as of December 2021. The investments in government securities include the purchase of FGN bond holdings, treasury bills, sukuk, and green bonds. Another 9.7% and 14.5% are invested in corporate debt securities and money market instruments, respectively. Well, only 0.27% and 0.72% were invested in foreign money market instruments and foreign equities. Well, this will be our talking point, and we'll come back. We'll take a break right now. Stay with us.
Despite encouraging a thrifty society and highlighting the importance of investment as an act that oiled the wheel of a dynamic economy, economists will argue that savings are a leakage to the economy. Investing is essential for expanding your money and keeping up with inflation in Nigeria. Over time, inflation erodes the purchasing power of cash. As a result, if you do not invest in a worthwhile instrument, the value of your monthly income savings will decrease with each passing day. The Nigerian stock market has attracted a large number of local and international investors, with the Nigerian equities market yielding 5% by the end of 2021, a far cry from the 50% it delivered in 2020. The Nigerian equities market was ranked top in the world among the 93 markets studied by experts. Over time, technological advancement have substantially eased the process of investing in the Nigerian equities market. However, there are a few pointers to keep in mind considering investing in the Nigerian stock market. Investors appoint stockbrokers to execute their buy and sell orders on their behalf. A stockbroker is a broker-dealer that is a member of the Nigerian Stock Exchange and is registered with the Securities and Exchange Commission. Easy access, affordability, since some firms need a minimum deposit to create an account, ethics and reputation, and their standing with the Securities and Exchange Commission are all significant elements to consider when selecting a stockbroker. You become an investor the instant you decide to trade on the Nigerian exchange. As a result, you will require an investor's account. Investor accounts are linked to their names and are unique to them. It's usually opened in conjunction with a central security clearance system account. A stock trading firm or broker opens your online options for you. You can trade equities or any other investment product online by using an online broker. When your broker wishes to buy shares for you, he does it through your investor's account. You can also use the account to purchase bonds. Your trading cash requirements will be proportionate to the level of risk you want to take or the volume of trades you want to make. Knowledge, according to financial gurus, is more valuable than everything else. It's crucial to stay on top of the current trends and keep your industry knowledge up to date. You should be able to detect possibilities and forecast trends. The news is on sale and the rumors are for purchase. This statement is quite common among investors. To best put it, don't trade based on emotion. Investing in the Nigerian equities market isn't a precise science. You should continue to study the market and trade as much as possible if you want to improve your trading abilities. Long-term success is contingent on the development of analytical abilities.
Glad to know you're still with us, and this is Analyst Hangout. Well, before we went on that timeout, I told us that we'll be joined by Oladipo Ajayi. Oladipo Ajayi now joins us virtually. Hello, Oladipo. Thank you for joining us today.
Hello, good afternoon.
Yeah, thanks for joining us. We're glad to have you on board.
Yeah.
Okay, well, we're looking at the pension fund contributors and what they are doing with their monies. Now, we're saying that despite the rise in monetary policy rates, interest rates on risk-free government securities like the Treasury bills and FGN bonds still lag, but turning a negative return when the yields are adjusted for inflation. And a recent article on Nairametrics confirms all the PFAs underperformed inflation and MPR based on returns in the first 9 months of the year. Now, I'd like you to stand by Mr. Oladipo. I'll come to you, but for now, I'd like Mr. Charles to address this particular one. Should contributors be worried?
Well, the PFAs or even PENCOM has a guideline that for these assets, for this investment, safety is number one, then of course a fair return. It does not mean because you are looking at safety, then you are going to get a negative return. That will not be the objective of any fund. And you know, these PFAs, the funds there are my funds, your funds, and every other Nigerian fund contributor to that fund. And at the end of the day, when they retire, they want to get some returns on their money. So yes, the PENCOM has done its best in putting the guidelines for this investment, but again, you could see what is going on in the economy. And like just what you have said, most of the pension funds now, they underperform because of the MPRO and inflation rate. Well, I would not say the contributors should be afraid.
Okay.
But I think, like Ambrose have said, this is the time now where the PFAs, the fund managers now, they need to call an emergency meeting, their investment team, they look at it very well. This is the time they need to rebalance their portfolio and see some of those assets that can get close to beat inflation, so that at the end of the day, they'll be reporting at least positive return for me and of course every other contributor. Yes, they cannot go beyond their guidelines.
Yes.
The guidelines are there. But again, if you look at that investment guideline, for me, it's fair enough. I think there is also investment in real estate. So they can also look at that area, because it has been proven over time that investment in real estate, you know, outperform. Then there are also some securities in the market currently now that we believe, looking at the numbers that are coming in, that can also meet. Of course, we have seen Q3 already, so I need to just go and sleep. I know that Q4 is going to follow, all things being equal. Of course, so I'm not going to mention specific security, but I know that our sectors,
yes.
The telecom sector is there. They can look at that very well. And of course, if I work for a pension fund, of course, I'm a consultant, I'll know what to tell them more and more.
You can do.
Well, coming back to you now, Mr. Ajayi, some globally renowned pension funds talk about the Norwegian, Japan, and South Africa focus on investing in assets outside of their country, you know, giving their pensioners better returns and a stronger hedge against inflation and exchange rate depreciations. Now, isn't it about time for Nigeria to begin to think in this direction?
Yeah, thank you very much. I think in that regard, for me, I think that the pension PENCOM need to actually look at that again, because the current Reform Act is actually long overdue. I think there's still something that we need to actually do to actually preserve the future of contributors. And if you look at equity, if you look at the value of currency has continued to plummet, and but that does not give room for us to now say that, oh, we should now look offshore for all available investment offshore, because of the parts of SEC wants a situation whereby they can actually regulate the market where contributors' funds are actually being invested, and which is actually, it makes a lot of sense. But there's nothing wrong in saying, okay, you are giving a leeway of saying like a 5% of your 5 to 10% of your portfolio actually can be invested in foreign investment. One way or the other is a way to actually hedge your portfolio. And another thing I also think we also need to do is because earlier they mentioned earlier the fact that return, there's negative real return, considering the level of inflation now and the available instruments in the markets. And I think one of the reasons because most pension managers are actually focusing more on the risk-free investments. And my other co-analyst mentioned that preservation is the first thing on the list, which is true. Because you don't want a situation whereby you invest contributors' fund in an asset class that in years to come, the company is no more, or that particular asset is non-existent again, because it's total loss to investors. So we need to actually look at the risk of the current valuation of the portfolio and the risk of totally losing the funds of contributors before we can actually make such decision. For me, there are a lot of investment that's in the markets that can actually also give a better return. And like my co-analyst mentioned, talked about the telecom sectors. There are many other sectors that can give you very good returns in terms of capital appreciation on the asset class and also maybe dividend yield on some of those instruments. So we need to actually reduce our focus more on the government instruments, because as we speak now, you look at a 15-year bond still giving like about 15% of the market, and currently inflation is not of 20. So indirectly or directly, you're already carrying about 500 basis points negative real return. So I think as a portfolio manager, also need to look at it in that direction as well, for opportunities that can help them narrow the gap, while also talking to the regulator on way they can actually assist to preserve contributors' capital. Thanks.
All right, thank you so much. Well, he said a whole lot. He said that, well, for him, he will support a review of the law so that to some extent they can invest more in foreign assets. And he's also particular about safety of these assets. You need to be very sure of the company you're investing in so that tomorrow you do not wake up and the company no longer exists. And then he said the PFAs also have to reduce their investments in FGN bonds. Okay, you're already saying thumbs up, so I need to hear your thoughts on that.
Actually, you know, in this part of the world, especially in Nigeria, because some PFAs don't feel that the equity market is not deep enough, most of the investment is what in the fixed income market, bonds, sukuk and all those stuff. But no climate that will remain in one direction. You know, they always change in terms of economic policies or the cycle of the economy, because we have a different cycle of economy. And when it comes where inflation is high like this and interest is high, it becomes a jittery position for them. That is what is already happening. Because like my colleague just said, that the funds of the contributors is shaking at least for that. Also, I love that Pecon also giving a kind of a rule ahead that you as a contributor can move your fund to where there's better service for you. And at the same time, I know for those in this market, since I came to the market, I've seen that most of the PFAs that do more of equity has always lead in performance in Nigeria. And I can mention 2 or 3 or 4 of them at this point. But that means it's true that this is the point that you need to readjust your portfolio, as you just said. And there are some also, they can easily increase their participation in equity. I know that, yes, most of them, the law is about 25%. Go and check all the PFA. They are doing less than 10% in equity. If they bring more, now that my colleague just said, there's opportunity already in the equity market, because there are some positions that you can take now with dividend yield of 15%, 14%, and capital appreciation of 20, that's about 24, 25. You are even ahead of inflation, and that also the better return in a short time. But I believe that for us to have a good market at this point, especially for those that are playing the market, the PFAs have supported the market since the foreign investor left the market. If they can do more by coming backwards, since around June, they started participating in the market, less participation. We have seen that the impact, in terms of volume traded so far till now, shows that they are not in the market now. But on the strength of these numbers we are seeing, I feel that they start coming back to see position to that taking, but the numbers are speaking very good opportunity in the market. Let them come back and take advantage of this market. But we're not they know why, because I say that at their corner now, even at next week, they'll be sitting having meeting. These numbers are coming. What we're going to do with this number? We need to, for that, we're expected to come back. And he said, I support that they should review also the PENCON in terms of where to put money. This investment in the debt market, the bond market, and I know that government has a way of either means or ways or opportunity and a way of creating money to do all this thing. But I'm telling you, the more you are dipping your hand into all this, you are creating that even at an artificial inflation, because you are not producing, you are just creating an additional fund to print fund to spend the economy. I believe that for me, that the government should also think twice. Let's have a good policy that will drive this economy. You can't separate the economy from what? From the equity market.